bulls have started to take profits, but is it enough to entice the bears? Let's find out right now. All right, let's look at last week's price action and then get into this week's operating plan, what we're going to do this week. So first things first, S&P 500 up 0.05%. Basically a flat week for the S&P 500. Now a neutral sell, it's a neutral sell signal, I would say. So we are getting a sell signal. We've had 7 weeks of basically upward price action. There's been the week before the last was a down week, but it didn't even go past that prior leg. So for now, the S&P 500 is definitely weakening. It's weakening in momentum, and it is also weakened in market breadth. Breadth is the number of stocks participating in an advance or a decline. And so when you look at that on the faster term one, you can see on the chart right there, somewhere on here, you can see that it's actually decreased while the S&P 500 has gone up. And so that's a warning sign that things might not be so good in the S&P 500, even though the overall price is up of it. So that is something to really pay attention to. And then the 12-month momentum, it's like our last line in the sand, and that thing is still negative right now. It's basically just barely negative. Another thing that's pretty interesting in the U.S. equities markets right now is that there's been a sharp change in U.S. discretion versus U.S. consumer staples. So consumer staples have started to outperform the discretionary sector. And so that leads one to believe that investors are becoming more risk adverse. It's just another sign that the market is weakening. And so there's a chart of it. You can see it right there, but you can see how there's that sharp change in it. And we're now in this bullish channel where you can see that consumer staples are starting to outperform consumer discretion. Okay, let's look at a little bit more granular in the chart of the S&P 500. Let's check out a weekly chart right now. There are 4 things that I want to point out here. Number 1, the bulls at least have started to take profits. Look, there were a lot of bulls that were buying down in this range here, and one way for them to take risk off of the table is to take profits or sell, raise cash, and that's exactly what some of them have started to do. So the bulls have started to take profits. Now it is up to the bears to see if they will take it further down. The second thing is that when we closed in the bottom half of last week's price action, so when we close in the bottom half of price action for the day or the week or the month, whatever you're measuring, that is a sell signal. And so we have a sell signal right here. It is a weak sell signal. However, the context is good for it, simply because of the third thing right here is that we have a possible lower high. So we've got a high, of course, we've got a high here, and then we've got a high here, and this could be the high for the next many weeks. So we'll see if that in fact does play out. And the final thing that I want to mention is that it fits in with possibly still being in this bear channel. The structure of the market, bearish, lower highs, and we'll see if it in fact does fall and we get a lower low. Now, in order for us to get bullish on this as far as a weekly swing goes, what we need to see is a pullback and then a retracement back, a strong buy signal before price gets much lower, if it does in fact get lower than this range right here. So going to be an interesting week as far as this goes because look, we're right there. This is a weak sell signal, but nonetheless it is a sell signal. We'll see if the bears can take advantage. When it comes to the operating plan this week, there are really 4 things worth mentioning. Number 1, US dollar absolutely crushed it last week, up over 1%, held support, still within our bullish channel, so looks good for the US dollar. Last week, the second thing being emerging markets, last week down pretty good for emerging markets. We got a strong sell signal for emerging markets, but the good thing is that they did surpass a more recent high or major high in the market, and so the whole point in buying them was a major trend reversal, a possible major trend reversal. So we're going to continue to hold there, and we're looking for them to hold support. The third thing is the technology position. up over 1% for the week. Look really good. Hasn't made a new high yet, but we are close to an all-time high in that position. If we can get that all-time high, it's good for the market overall, U.S. equities overall, and especially, of course, good for the technology sector. So we'll see if we can get it there, but looks good for that particular ETF itself. So, and then the final thing, the fourth thing is U.S. Treasuries. U.S. Treasuries just surpassed a new high. They look good. They're starting to strengthen up. Again, a major trend reversal, and they could be what a safe haven if we start to see a pullback or a steep pullback in the U.S. equities market. So we're going to pay really close attention there. So hold on to everything, and then also look at to add some bonds if we can get a strong buy trigger this week in some of those positions. All right, with that, hey, if you don't have a copy of my book, Home Run Financial Planning, get a copy. Click on the link below, and I'll get it out to you. All right, have a great week, and we'll talk to you next time.